Hi guys, good afternoon and welcome to Moneycontrol. I'm Karunya Rao. With me is Manisha Gupta, and today we'll be talking about not only the fall in crude prices but also natural rubber. And before that, if you guys are tracking the equity markets as well, you would have seen that despite the overall weakness in the market, tire stocks are looking particularly upbeat, and perhaps a lot of that has to do with the correction in crude, which continues to be sub 80 levels, and of course the fall in synthetic and natural rubber prices. So let's first talk about what's happening in rubber space and why the prices have fallen.
So, this is not a new phenomenon. It's not that rubber prices have declined today. If you look at the last 1 year, we have seen the rubber prices decline by 22%, and it has been coming. The high for last year for Indian markets was around 160 rupees per kg. We are trading at 130 rupees per kg right now. In the international markets, we are trading near those 2-year lows. But that's exactly how the couple of months have been until now. This is peak arrival season, and until the Feb, you will see a lot of rubber come into the market. If the tire companies are not buying, if they're not picking up stocks, if they still think that the prices can go further down from here, you could be looking at some more pressure coming into the market. But yes, put the two together, the kind of sell-off that we've seen in rubber and the fact that it's not going up in a jiffy and the fact that crude has declined 10% in 2 days clearly did the trick.
Augurs well for tire companies. And what about crude? I mean, it continues to languish. So like you said, 75 is a very strong support zone, but do you think that the continued weakness, the sustained weakness that we're seeing right now could lead to something more bigger than what we expect?
Not really, because after 10% in 2 days as a decline, today is a percentage point on the higher side. So we seem to be holding those levels right now. Having said that, another $2 to $3 to $4 decline from here clearly can't be ruled out, depending on what kind of US non-farm payroll data we get to see on Friday. But yes, the manufacturing data from China is something we've been talking about on how that is weak. The US numbers came in last evening and that were on the weaker side as well. In any case, we are concerned about on what kind of demand will we see from China, because when you look at China, you have the Lunar New Year holidays coming in from the third week. Ahead of that, there should be some restocking that usually happens, but we don't see that at all this time around. Even for copper, I mean, we're not discussing that right now, but just to give an example, in October, China was buying and their premium from 3 month to spot was $150. Now, as of now, there is no buying. That premium has come down to $37. So there is no buying.
Absolutely, and the interesting thing here is that how it augurs for domestic companies, especially in the auto space, because not only today, but we've seen some amount of rebound happening in auto stocks because A, crude prices have fallen, B, natural rubber, of course, as pointed out, and C, even a lot of these metals have corrected a fair bit. So all of this combined is really good news for any auto manufacturing company or an ancillary company for that matter. But yes, like Manisha pointed out, whether the buying happens at these levels or will they wait for further decline, especially in the natural rubber space, is something to wait and watch out for. Apart from that, I mean, since we're talking crude, let's also address gas prices. How are they holding out?
Oh, that's a big heartache. 25% decline, 0.25% of your value lost in 5 days is just too big a movement here. It was in August we were trading at $10 per MMBTU. In December we were trading at $7. Now the price has dipped below $4 as well. So it has been a constant bearish chart that we've seen come in for the gas prices. And will you go out and buy right now? I mean, there are no buyers really, because the European Union, the Germany have nearly 90% of their capacity stocked well for gas there. And look at the kind of weather we are in right now. It's a heat wave in Europe. There is no snowfall happening in Switzerland. The ski destinations are all empty. So there is a concern and there is no gas requirement. So yeah, some more decline for gas is still on cards.
And again, just to rub it in, we did point it out just 2 days ago. Manisha was saying that gas prices are not even close to seeing a respite anytime soon. So, and again, there you have it, a 25% cut in 5 sessions. That's quite a beating. With that, we're going to wrap it up right here. As we end the show, just to recap, a fall in crude, a fall in natural rubber, and a fall in in gas prices is something that you might want to keep on your radar. Thank you for watching. We'll be back again tomorrow.